Good afternoon, everybody. Welcome to Tech Talk at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. This is where we break down some charts and some option analysis. I'm going to give you estimated moves, in other words, price ranges for stocks that you're going to want to be taking a look at, as well as some ETFs. And I want to start off with oil. Now, I'm going to use the proxy for oil, which is an ETF called USO. That's the ticker symbol, USO. That's the United States Oil Fund. It's trading right now at 10.15. Now, crude markets have been up considerably today. As a matter of fact, you have the West Texas contract, the contract that's traded here in the States primarily, trading around $49, and you have crude up 2%, the ETF. As you can see, crude has been challenged. It has been falling off for the last basically month. It has popped over its 20-day moving average, and for those of you that know technical analysis and the way we look at it at MarketStream.live and the way I utilize it, with this price action below the 20-day moving average, which is the green line, below the 50-day moving average, which is the red line, and below the 200-day moving average, the bears have been in control, right? The price action is below these moving averages. All that's giving me is the general sentiment of the market. Now, that's shifted so far in the short term. As you can see, it's now between the 20 and 50-day moving average. Folks, this is a battleground. This is where if the new bulls, the short-term bulls, are going to have any type of opportunity to continue to the upside, they're going to have to not only hold this 20-day moving average, the red line or green line, they're going to have to beat out the red line, which is right here, the 50-day moving average, and that's coming in at 1040. So they got some work to do, and they're trading off of their highs. They're actually straddling right on that 20-day moving average. Crude could have some volatility coming into that contract. Specifically, you're going to look at the options. And the options right now for the next 4 days are pricing in a 19-cent range. So they're pricing in a 2% range going into the end of this week. So with it already moving 20 cents, let's see how much more action we're going to see. And this, of course, May 25th is going to be a very large day. That's when the OPEC and non-OPEC nations meet. They will formally extend or not extend the production cuts that they have been adhering to, supposedly. And we'll also watch the EIA and API reports that will be out Wednesday and Thursday of this week. Now, over the next 11 days for USO, you can basically price in roughly around a 37-cent move for the next 11 days. So that's through next Friday. So we're going to go through expiration this week and then into next Friday. 39 cents, you're basically seeing about a 3.5%, almost 4% range being priced in to the USO contract for the next 11 days. So now you have levels. You could see this thing as high as $10.50, or you could see it, or even a little bit higher, or as low as 9 and some change. Now, we haven't seen a challenge 960 in about a week, but you can see that the ranges are now going to be tested. Let's see if they actually occur, especially after the latest news. The next commodity that I want to take a look at is gold. Gold has been under pressure for the last few weeks. It's held up, though. Last week bounced, but still, you can clearly see with the 20 and 50-day moving average as well as the 200-day moving average right there, and all the stock action down here, gold bears are in control. GLD is the ETF that I want to take a look at if you don't have access to the gold futures contract. GLD right now had some momentum early in the session, but this could be one of those grindy type of trades. The bears are still in control, but obviously with any headline, we have German elections, we still have the North Korean volatility. They're lobbing missiles again this weekend. We haven't heard much from the White House this week, and there's a lot of, let's use the term, uncertainty on what is going on in the White House at this juncture, as well as now with the health care bill in the Senate. We'll see how that transpires. But GLD right now, up today 30 cents. That's good for 2.26% to the upside at 117.13. I don't know if the bulls are going to have some teeth here, but GLD right now with an IV rank of 3.7 and on a scale of 0 to 100, 100 being expecting a lot of risk or a lot of violent potential moves, either up or down, or 0, very little violent moves being expected. we're on the low end for gold, so you could get a grindy trade. That's why I'm saying it. There's an 89-cent range being priced in to this $117 ETF over the next 4 days. For the next 11 days, it's $1.49. So you basically have a little over 1% being priced in for the next 11 days. Now, QLD is an ultra NASDAQ QQQ upside type of ETF. We've talked about QLD in the past. I wanted to look at this because you got the likes of Facebook, Apple, Amazon, Netflix, Google, Priceline, you name it. These have been the big boys that have been holding this market up, have been putting it on its back, specifically Apple, Facebook, and Google being the most notable ones, as well as Amazon. Right now, QLD has an IV rank of 21. Still low, so not an expectation of big violent moves. And hey, look at the market action. These bars show the open and close. It's very small, very tight, very grindy action, but the bulls are clearly in control in tech. This 20 and 50-day moving average is below the price action. That's telling you that right now the bulls have control. So if you're long tech, or if you're long any of these large cap tech names, so far, so good. Now the QLD is pricing in over the next 4 days a potential range of $8.84 in QLD. This is interesting action here in this $117 underlying. Again, with $8 of movement being priced in here, you're seeing like a 7% range for the next 4 days. While volatility is low, they're pricing in some potential decent movement in QLD. Let's see if it actually comes to fruition. Now, speaking of tech, we're seeing Amazon. One of the names that we just discussed, one of the names that the market, basically it has put the market on its back and been taking it to the upside. It's down today, $4.99, down 0.5%. Stock's trading at $9.56 right now, but clearly you can see it's above its 20 and its 50-day moving average. Again, why am I looking at that? There's no magic formula to this. It's just giving me a concept of who's in control. The bulls are in control right now. It is pulling back off of its best levels today and actually trading on its lows. So right now you'd say, oh my gosh, this is getting bearish. No, I don't see that right now. Until I start to see a challenge in between this 20 and 50-day moving average, the green line and the red line, this is my battleground, as I call it. This is where I watch to see if not only volatility increases, but if we break this red line, the 50-day moving average, that means the bears on the short and intermediate term bulls have lost control. Right now, Amazon's running at a 38 implied volatility rank. So it's getting higher, but still not even at that midpoint. So there is an expectation of potential moves, but not super violent. We're going to watch that closely, though, to see if any further pullback and challenge of the 20 and 50-day increases implied volatility. Right now, over the next 4 days, expect a $10.83 range for Amazon and $19 for the next 11 days. So some decent movement being priced in right now. Currently, you're seeing right around 2 to 4% being priced in between the next 4 and 11 days. For Amazon, there could be some decent action there. I want to take a look at a semi-name, one that was kind of brought to my attention when I heard an old buddy speaking this morning. David Colt was speaking on behalf of his new company, Reverb.com, and I remember a stock that we always talked about way back in 2001 called AMAT. AMAT is the ticker symbol. It's a semiconductor, and the semis have been off the charts on fire. Whether you're talking about Intel or whatnot, the SMH, which is the semiconductor ETF that tracks the sector, it has been through the roof, and these have been performing quite well. As a matter of fact, AMAT, you can see clearly right here to the upside. Bulls are clearly in control when you're looking at the moving averages. Now, what are the options telling me? Right now, the AMAT has a Applied Materials, has a 47 IV rank, so it's now getting into that mid-range. There is a heightened expectation of potential decent-sized moves. Now, with the stock up 1.91% today, I looked at the options. The options for the next 4 days are pricing in a range of around $6.75 for this $44 stock. That's pretty significant when you look at it over the next couple of days. Obviously, there's some expectation of some potential violent moves in the short term, especially this week. looking out forward, they're only pricing into the options that are expiring next week. Looks like only about maybe a 4% range. So you're seeing this week a heightened expectation of potential moves. That is a red flag. Let's watch AMAT this week. And then finally, an earnings name, Home Depot. We've been and going into tomorrow's numbers, this could be very interesting. Home Depot is going to be announcing earnings, and we have new housing starts tomorrow. We also have housing permits out tomorrow. These are going to be big numbers. They could be market movers. So I wanted to look at Home Depot not only before earnings, but also because you have that economic data that's due out. Home Depot, again, over the 20 and 50-day moving average, as well as its 200. The bulls are clearly in control in this big box home improvement name. What are the options telling me? Well, right now, Home Depot's implied volatility rank is at 62. There is a heightened sense of potential violent moves in the underlying. Now, we haven't seen it as of late, but earnings, which are due out tomorrow, and as a matter of fact, if I look at this, the earnings expectations right now for Home Depot are 161 on the estimate for earnings. They're due out tomorrow. The options are telling me that the stock could move $3.47, $3.50 over the next 4 days, either up or down. So that's the range that they're pricing in going into earnings. Basically, you're looking at around right around a 3 to 5% move being priced in at this juncture. This is very interesting stuff. So watch, we got a 5% move over the next 5 days or 4 days being priced into Home Depot, and before earnings and before this potentially market moving, especially for housing, market moving data that's going to be out with starts and permits tomorrow morning. So keep an eye on that. All right, folks, that is it right now for Tech Talk. I hope this was extremely transparent. Join me at 3:30 Eastern Time, 3:30 Central Time, 4:30 Eastern Time. I'm going to be back on wrapping up all of today's action. So we'll see you here live on MarketStream.